Ever been there? You want to make money, but don't know how, or you've got your real estate license in hand. You know your stuff about homestead exemptions and township measurements, but then you think, now what? Knowing how many square feet are in an acre is cool, but how do you actually kickstart a real estate business and make money? Well, you're not alone. Don't worry, we've got your back. We've bundled up all the tools and resources you need to get your real estate business off the ground and make some cash. So keep watching, and let's turn this into a thriving business. Building a business is a wild ride, right? It takes tons of energy and laser-like focus. But before you jump in, you gotta know why you're doing it. Are you all about the thrill of closing deals? Or maybe you're fired up about helping people and turning their dreams into reality. Or maybe you're all about making your community shine. Whatever it is, that why will steer every big and tiny decision you make for your biz. Now, real estate. Yep, it's made more millionaires than pretty much any other industry out there. Still, people hesitate to dive in, mostly because all of those myths flying around. A lot of folks think they need a big old pile of cash to get started, but surprise, that's not always true. The real superpower you need is knowing how to track down the money. And spoiler alert, you don't need a ton to get the ball rolling. If you've got the know-how, you can totally start making cash in real estate even if you're just getting your feet wet. When your real estate goes up in value, that's called appreciation, and that's where the magic happens. Most investors make a nice profit when they sell, but there's also a slick trick to boost those gains: refinancing your loan at a lower interest rate. This little move cuts down your costs and helps you rake in even more when it's time to cash out. When it comes to undeveloped land, appreciation kicks in once you start building on it. Throw in some houses or commercial spaces and boom, the value shoots up. Sometimes just finding valuable minerals or other goodies on your land can make its worth skyrocket, assuming you've got the rights to them, of course. Commercial properties follow the same rules as residential and raw land. It's all about location, development, and making improvements. For homes, though, location is the name of the game. A neighborhood with cool upgrades like new transit lines, schools, shops, or parks can make home prices soar. But heads up, it can go the other way too. If the area starts to lose its charm, those prices might take a dip, and don't underestimate the power of a good remodel. But there's also inflation. It's a bit of a double-edged sword. Sure, inflation can boost your property's value, making it look like you're raking in the big bucks when you sell. But while you might be getting 5 times your money from that sale, everything else around you is probably shot up in price too. So even though your property's worth more, your buying power might not be quite as strong. The money-making side of real estate. First up, raw land income. If you own raw land, you could be sitting on a gold mine. Companies might pay you royalties for any treasures they find or shell out regular payments for things like pump jacks, pipelines, gravel pits, access roads, or even cell towers they add to your property. Next, we've got residential rent. This one's simple. Tenants pay you a fixed monthly rent to live on your property. But the trick to making this work smoothly? Location, location, location. A great spot makes it way easier to keep those tenants coming in. Then there's commercial property income, where the cash flow comes from businesses renting out your space. Plus, there's a little bonus. Commercial tenants might pay extra fees for perks like the right to snatch up the office next door if it ever goes up for grabs. They'll pay a premium to hold that option, even if they don't end up using it. Smart buying and selling moves in real estate. The classic buy and hold strategy. A lot of investors like to grab a single-family home to rent out or snag a multi-family property, live in one unit, and let the rent from the other units pay off that mortgage. You can either roll up your sleeves and manage the place yourself or hire a property management company to handle the heavy lifting. Then there's the art of flipping. Flippers are all about those quick, high-return makeovers. They buy houses, add some smart fixes, and then sell them off fast for a nice profit. The trick? Finding the right house that just needs a little love to shine. Vacation rentals are another sweet deal, especially if you've got a property in a tourist hotspot. You can rent out a whole house or even just a room on platforms like Airbnb, VRBO, or HomeAway. Just keep an eye on local rules, since they usually have the final say on how you can list your space. But here's a hot update. This year marks a big shakeup in the U.S. real estate scene, with new rules changing the game for how most real estate pros operate. These changes, stemming from a massive $418 million antitrust settlement by the National Association of Realtors, which has a whopping 1.5 million members, are set to transform how agents get paid and who foots the bill. We're talking about the most significant shift in realtor rules in a a generation. Historically, buyers didn't pay their real estate brokers directly, since commissions for both the buyer's agent and the seller's agent were typically covered by the seller. Commissions usually hover around 5 or 6% of the home selling price. So, for a home priced at around $450,000, the seller would be dishing out about $27,000 in fees. Many experts have pointed out that these commissions are baked into the listing price, making homes more expensive than they need to be. Now, with the new rules, sellers' agents won't be able to advertise commission fees to buyers' agents on the MLS used to list and find homes. This means buyers' agents can't search for homes based on how much commission they'll earn, a practice known as steering. Critics argue this has led agents to overlook properties that match their clients' needs just because the seller was offering a lower commission. The second big change is about how buyers and agents interact. Now, buyers must sign a legally binding representation agreement with their agent before they can start touring homes. This new setup ensures that home buyers are fully aware of how their agent gets paid. If a seller doesn't agree to pay the agent's commission, guess who's picking up the tab? You guessed it, the buyer. But these agreements also make it clear that commissions are negotiable. Plus, a buyer's agent can't pocket more than what the buyer originally agreed to, even if the seller is willing to offer extra. So, this new wave of rules aims to create a more transparent and fair environment in the real estate market. Keeping that in mind, let's take a look at some other exciting ways to rake in cash from real estate. We have the real estate investment trusts. This lets you invest in a bunch of commercial properties without having to buy them all yourself. You buy shares in a fund that manages these properties, and the rental income is shared with you as a nice little distribution. Think of it like being a landlord without the hassle. Just remember that the income gets calculated after all the operating expenses are taken care of. Then we have mortgage investment corporations, real estate investment groups, and mortgage-backed securities. These options are all about private mortgages rather than actual properties. MICs hold entire mortgages and pass the interest from those payments straight to investors, while MBSs bundle up a bunch of mortgages to sell shares. REIGs are often private and can offer unique investment structures, giving you equity opportunities or partnership roles in managing property. Short sales are another route, allowing you to purchase a home directly from a lender when the current homeowner is struggling to keep up with payments. Just a heads up though, this can be a bit of a maze to navigate. Then there are the lease options, where you can lease a property with an option to buy it later. Is investing in real estate always a guaranteed win? Not quite. The real estate market has its ups and downs, so there's always a chance to make money or lose it. So, how do most people actually make a profit in real estate? The answer is appreciation. This means your property's value goes up over time and you cash in when you sell. Now, if you're on the hunt for properties to buy, don't worry, you've got options. Working with a realtor or a real estate pro can help you find those hidden gems. And if you prefer to do some digging on your own, online platforms like Zillow are great places to check out. Real estate isn't just about buying a house. It's a whole world of opportunities. From watching your property value skyrocket through appreciation to reeling in that sweet rental income, there's a strategy for everyone. But don't forget to keep an eye on those pesky costs and risks, because let's be real, nobody likes surprise expenses. So, are you ready to explore the exciting world of real estate investing? If you love this video and want to keep the good vibes rolling, hit that like button, smash that subscribe button, and let us know your thoughts in the comments down below.